Welcome to today's Bitcoin Market Explainer. We're cutting right through the noise today to bring you a calm, data-driven look at the last 5 days of market conditions. We're talking price action, ETF flows, and the true on-chain health of the network as of July 27, 2026. Let's just dive right in.
Now, before we get into the heavy numbers, I want to anchor our mindset with a bit of wisdom from the legendary investor Howard Marks. In good times, everyone looks like a genius, right? It's just a great reminder for us to keep a rational, totally emotionless perspective. Whether we're seeing some short-term turbulence or out-of-nowhere rallies, our goal today is simply to let the data tell the story.
So, our immediate headline today is the current price, sitting right at $64,850. And honestly, rather than giving us those wild, volatile swings we're all used to, the market is just kind of chopping around in a really tight consolidation box right now. We had that bounce from the lows earlier in the month, and now, well, we're basically in a holding pattern. The market is just taking a breather, trying to figure out its next big fundamental move.
And the parameters of this tight box are actually pretty well defined. On the upside, we're staring down this immediate psychological resistance band, right around that $66,000 to $68,000 mark. Meanwhile, on the downside, our first crucial line of support is firming up near $61,000 to $62,000. So for the moment, the price is literally just pacing back and forth between these two walls.
Now, you might be wondering what's causing this stall. Well, the primary culprit is directly tied to the spot ETF flows. Over the past 5 sessions, the momentum has completely shifted gears. We actually started the week riding this incredible 7-session streak of positive inflows. We're talking nearly $1 billion coming in. But then, out of nowhere, that reversed into a pretty harsh 2-day bleed. On July 23rd, we saw $225.1 million exit, largely driven by IBIT outflows. And that was followed right up with another $240.1 million walking out the door on July 24th.
Because of that sharp 1-2 punch, our total 5-day net flow is now, well, it's barely flat. We are clinging to a slightly positive $33.9 million overall. Think about that. The market essentially unwound a massive chunk of momentum from a 2-week rally in just 48 hours. It makes total sense why the price action is stalling out, right? That massive institutional buying pressure we were seeing simply hit the pause button.
But hey, we need to look beyond just the ETF flows and really check the internal health of the market. Our rapid-fire 5-day on-chain dashboard is showing this fascinating tug-of-war happening right beneath the surface. What we've got is a very clear split. On one hand, you have short-term retail fear triggered by the stalling price. But on the other hand, the long-term fundamental stability of the network remains absolutely rock solid.
When we actually quantify these conflicting emotions, the split is super interesting. The Fear and Greed Index is sitting stubbornly down at 27, which is firmly in fear territory. And sure, the Coinbase premium is showing some mild U.S. sell-side pressure at minus 0.06%. But here's the crucial part. Leverage stress is incredibly low. Funding rates are just hovering at a mild positive 0.008%. So we're seeing absolutely none of the speculative overheating that usually pops up before a major crash. Long story short, the market is scared, for sure, but it is definitely not over-leveraged.
To make sense of all this, let's look at profitability. Our NUPL metric, that's net unrealized profit and loss, is sitting at a very calm 0.16. Now, mathematically speaking, that puts us squarely in the hope phase. We are miles away from extreme euphoria and just as far from total capitulation. And when you pair that with an MV/RV ratio of 1.17, the signal is clear. The network is in a very healthy, slightly undervalued accumulation state. So for anyone stressing over this short-term sideways chop, just remember, the fundamentals are quietly resting. They are not breaking down.
Okay, let's zoom out from the 5-day micro view and take a look at the macro picture, because this is where the contrast gets wild. While short-term traders are out there sweating over a few $1,000s up or down, Bitcoin is currently trading a staggering 64.1% below its 2026 power law fair value. And that model projects fair value all the way up at $180,405.
Actually, at today's price, we're sitting 14.4% below the model's absolute floor for 2026, which is $75,770. When you put that into historical context, this specific price band is essentially a deep value, long-term accumulation zone. I mean, despite the daily news cycle and all those ETF outflows causing short-term panic, the broader math is telling us a completely different story. It suggests Bitcoin is currently resting in heavily discounted territory for anyone with a multi-year time horizon.
So, that brings us to the ultimate question as we wrap up today's market report. With Bitcoin hanging out in this historic, data-verified value zone, we really have to start looking outside the asset itself. As you process all this data, ask yourself, will shifting macroeconomic liquidity and those upcoming Fed policy decisions finally provide the spark to close that massive 64% valuation gap? Or are we just going to keep chopping sideways where patience remains your best asset? We'll be keeping a close eye on the data to bring you the facts. Thanks so much for joining this explainer, and we'll see you next time.